The spotlight today is on Asian economies. The region's two biggest exporters showed further signs of slowing down in data published today, signaling risks of a fresh slide in global demand. Japan's core machinery orders in May plunged 14.8% from April, with the key gauge of capital spending sinking far below analyst expectations of a 3.3% decline, raising the risk that growth momentum in the world's number 3 economy will stall if firms start to scale back investment. Meanwhile, Chinese consumer inflation eased more than expected in June, with producer prices in outright deflation for a fourth month, signaling that demand for Chinese goods, especially from foreign customers, is declining as the global economy weakens. Chinese Premier Wen Jiabao today said that Beijing will implement more aggressive efforts to support growth. Exports from Taiwan, meanwhile, one of the world's largest producers of electronics, declined in annual terms for a fourth straight month in June, against market expectations of a modest rise. Staying with the Chinese economy, this is expected to be a crucial week for China. Investors are watching out for the country's second quarter GDP figures, which are out due on Friday. Many believe the data will signal a significant slowdown. And for more on China, we are now joined on the show by Dr. Yifan Hu, who's head of research and chief economist at Haitong International. Now, to begin with, Chinese Premier Wen Jiabao said over the weekend the Chinese government will intensify fine-tuning policies just a few days after the PBOC cut rates. What do you think this signifies?
I think in our view, the China's government will come out more like a supportive policy for the real economy. But at the same time, I think the China's will continue to control the real estate market. So I think that for Premier Wen, he mentioned that for signify the supportive policy, I would interpret it as we could have a more RR cuts and including interest rate cuts, and also more a supportive policy for consumption and infrastructure to pull up the economy.
Now, Yifan, we had China's inflation data put out today, and it's slower than what was forecast earlier. What does this really tell you about the PBOC's pace of monetary easing?
We expect the prices might pick up since July. There's mainly because of the two reasons. And the first reason is because of the growth is to pick up with all this supportive policy, like a fiscal policy and a monetary policy. And secondly, we think it's because of currently the drought in the northern China is very serious. So most areas, most crop production base in China, including Henan, Anhui, Shanxi, and Dongbei, and they are all experienced a very serious drought. They are the drought is about the worst. According to them, it's the worst in the past 60 years. So we think that will affect the prices of the crop. So it might cause the inflation to increase again. So that's actually the implication for China's policy. We think that there will be more RR cuts, but for the interest rate cuts, the government will be very cautious.
Now, Yifan, we also have trade data out tomorrow, which is going to say a lot about the slowdown in China's exports and possibly a growth in imports, perhaps. Now, what do you think is going to come out from the data that will show that the rebalancing efforts of China are making headway?
The growth will be around 15%, but at the same time, the imports we think will be quite weak because of the very weak domestic demand. So for the imbalance, I think that because of the China's exports drop very significantly, but at the same time, the imports drop even more. So that's actually bring further imbalance in China. So for the last few months, we saw the China's trade surplus actually surged from 5 billion to 10 billion to almost 20 billion. And this month, we still expect that it will be over 20 billion. So I think the situation, the global weak demand didn't really rebalance the imbalance in China. And I think the China really have to have more supportive policy to boost its domestic consumption.
All right, so Yifan, you're saying that imports are not going to show any improvement in June. You don't think that imports this year will pick up and show that the rebalancing efforts are making headway?
In our view, I think the June export growth will be similar to May. although the market expected will drop significantly because we think the momentum might continue. So we expect actually will be similar growth rate as the last month. But overall, the whole year, we don't expect the export will pick up so quickly. So we expect the overall 12% of the export growth for the whole year.